Hi, and welcome to the Stock Scores Market Minutes for February 26th, 2018. This week, my topic, base your trading approach on data. I'll then do my regular weekly market analysis and show you the trade of the week on NIHD, a stock that was up over 70% on Friday. All right, let's get into this week's topic. Base your trading approach on data. I consider myself to be an algorithmic trader. That means I'm using logic-based rules to pick entry and exit points. Trading data determines if the rules are effective. So I have my trading rules: buy when A, B, and C happen, and then sell when D and E happen. I can then take those rules and, using computers, test them over a large data set and collect data so that I can then optimize the rules further. Now, if those rules have a positive expected value, I can develop a process to execute the strategy. So let me show you how I do it. This is a program called TradeStation, and I have taken my rules for one of my strategies, one called the worm, and I've programmed it into TradeStation. And so you can see there's a little pink dot there. There's some lines drawn in this chart. All of my rules are automatically executed on the chart so that there's no human judgment. There's no bias. The computer basically takes my rules and says buy here, sell here. And in the case of Caterpillar on Friday, it moved up what I call 2 reward for risk elements, a successful trade. Now that is the execution of the rules, and again, I always make sure that the computer is doing it because we humans tend to have a bias. I also collect data from that program and I put it into an Excel spreadsheet. So this is an example of my Excel spreadsheet. It's got actually thousands of lines of data just for the month of February. And I can do what-if analysis using some of these filters up at the top to determine what was the optimal relationship of those rules to find the maximum profit for the month and also the maximum average profit per trade. And I'll always be working on tweaking the rules using this process. I can then also look at the profitability by trading day using different scenarios. So in this case, I've got my low liquidity trades, which are trades where the number of trades is lower, and therefore I take a smaller risk amount on those. I've also got high liquidity trades. I've got short trades. I add them up, and I can look at it day by day and compare what worked the best on each day relative to how the market moved. Now this was a unique month because we had a correction in the month of February, and so we had some big profitable days on the short side, 363 RR on February 8th when the market really dropped. And on that particular day, the buys didn't work very well, but the shorts really worked well. And that's the kind of thing I look at. I go look at the chart and say, well, why did that happen? When you look at the chart of what happened on February 8th, it seems fairly clear. Also, why on February 9th it was a bad day, because that was the day the market bottomed and then reversed and went higher again. And from that, I can look at my average profit per trade, all those sorts of things that are measured in that spreadsheet. Now, from that, I can then develop a process using my trading software to execute the rules as I have established them. So I have this particular program, TradeStation, running during the day, executing my trading strategy using a process I've developed to find the opportunities as quickly as possible with a minimal amount of slippage. So that's a basic overview of algorithmic trading as I do it. There's other ways to do it. That's how I do it. And certainly you can develop it in your own way, but that's something that works well for me. All right, so let's look at the chart of the S&P 500 because it's an important move that happened late this week. Now, we talked about it in past weeks. The downward trend line was broken. You can see it rallied up to the trend line, stalled briefly, then broke it. That was the first signal that the bottom was in for the market. Now, since that time, we've been building this little flag pattern. I talked about that in the last week in my daily newsletter. But on Friday, it broke through the top of the flag. And that is a signal that the buyers are taking back control of the market after obviously the sellers were really in control through the early part of February. That points to higher prices ahead in the near term. The question is, will we get back to the old highs or will we fall short? Don't know what's going to happen, but I expect that early this week we should see some further gains The real question is, does it make new highs or does it get stuck at a falling top, in which case we may get a retest of that long-term upward trend line that I've talked about. Now here is the longer term chart, and you can see if I draw a long-term trend line, we hit it once, twice, three times. This is a 3-year weekly chart, so going back a long time. Hit it again there. That is why I said the market probably bottomed short term. Why? Because it had gone parabolic, it pulled back to the trend line, and it bounced off of it. It went through during the week, but it didn't close below that trend line for the week, and so we are still in a bull market, even though we've had some real volatility lately. Now the question is, do we now over the next few weeks move to new highs, or do we build a falling top, perhaps around 280 on the S&P, and then fall back and retest that trend line? For now, we have to remain bullish because the upward trend line is intact. If we make that falling top, if we break the long-term trend line, then we shall become bearish. Looking at the chart of the small cap sector, the IWM, which is the Russell 2000. It didn't draw that line great, but you can get the sense that we also held the upward trend line on the Russell 2000, the small cap stocks. So this is in a bull market channel, and we've sank recently to the bottom of the channel. I expect we will now rise up to the top. Until we break down through the bottom of that channel, stay bullish, stay optimistic. Onto the Canadian market, which hasn't fared as well as the US market, although the Canadian dollar has fared better. So in real terms, it's not as bad as it looks. But you can see we had that parabolic trend to the downside. We broke it. We broke up from a rising bottom. That was a sign of optimism. And now we're slowly inching our way higher in recovery mode. Like I said, it doesn't look as good as the US market, but it doesn't look bad either. At least we are building rising bottoms on the short-term chart. Now looking at the longer-term chart, we have broken that long-term upward trend line. If I draw a line like that, you can see that that trend line has been broken, and that means best case scenario is we probably go sideways in this range for a little while. If we were to fall down through that line of support right around $22 on the XIU, which is the ETF that represents the TSX 60, then you need to become bear. For now, it is a neutral chart. Onto the TSX Venture, heavily weighted in the mining, energy, and cannabis stocks, which have taken a real forefront in this market. We are still showing a rising bottom chart, which means there is optimism, but we had that breakout and then the collapse, and that occurred when there was profit taking in those cannabis stocks. They have held support. They are trying to bounce. If they break down through this support zone, get worried. For now, it is a neutral to optimistic chart, but I'd like to see it move back through the highs. I don't know if that's going to happen unless we get a real rush into the gold mining area, which could happen because gold is building an optimistic chart. We'll see that in a moment. Treasury bonds, this is the real culprit for much of the selling pressure in the US stock market. Rising interest rates made people take some profit in the stock market, and many fearing that rising interest rates will put the brakes on the bull market for US stocks. However, very important to note, we have strong support right there. We've hit it once, we hit it twice. That was back in 2016 and early 2017. We creeped below it this past week, but we closed above it, and that shows that the market is holding that support zone. My expectation is that we will get a bounce back in US bonds. That means interest rates will go down. That will be supportive for stocks and help it move up over the next week. That doesn't mean that we're out of the woods, because we could move up for a couple weeks, then come right back down and break down through that support zone. If that happens, I expect we'll also see a break of that long-term upward trend line in stocks. So that is something to keep an eye on over the next few weeks. US dollar has really been doing poorly. There is the long-term downward trend. We ran away from the downward trend. We came back to it. We've run away. I expect we're going to come back to it. But until we break that downward trend line, you want to be a bear for the US dollar. And gold, which benefits from the weakness in the US dollar, building an optimistic chart. You can see this very long-term ascending triangle pattern. Lots of volatility on the left side. Now we're over on the right side getting much less volatility. We may see gold pull back short term, but if it can break through this ceiling price, 130 on the GLD, then we've got a bull signal for gold. It's not there yet. It's slowly building optimism. I don't expect it's going to break out next week, but perhaps in the next few months it could if that US dollar continues to be weak. The oil market had a little bit of profit taking really for just 1 week, but now it is building that upward trend line. You can see we ran away from the trend line. We've pulled back to it, bounced off of it. Now I expect we will continue higher. We had a decent week for oil last week. Is it going to get through that resistance zone? We got about another week of upside before it tries. That's what we want to watch for. I think what will happen is, if you think about the pattern like this, we're going to do this for a little while. Build a little bit of a base and then hopefully break out for the oil bulls to be happy. And finally, the fear chart. This is the VXX, the ETN that moves up as the volatility increases in the market. Of course, we had a dramatic run higher there, and we've pulled back in the last week and a half, 2 weeks. And on Friday, we made an important breakdown because this is a pennant pattern here, and we broke down from that pennant pattern, and that points to lower prices ahead for the VXX. That would coincide with further gains in the stock market as the fear comes off the table. Now, this is what will probably happen. It doesn't mean it is what will happen. If the stock market, in fact, retraces and retests that trend line, you're going to see the fear chart skyrocket. But for now, it looks like it wants to move lower. All right, so my ratings then: bullish on both time frames for US stocks, neutral on both time frames for Canadian stocks, gold neutral on both time frames. It is building optimism, but it's going to take some work to break through that resistance zone. Oil, bullish long term as it is in an upward trend, neutral short term as it's coming into some resistance. US stocks made an important move higher Friday, which puts the buyers back in control for now. Having the bond market at support will help, as interest rates should stall their recent rise, and of course that means the bond market should stall its fall lower. Canadian stocks are lagging the US markets, but they are stabilizing, just like the US is. Gold remains under resistance, but it is building that optimism. And oil back into the upward trend. Fear is falling. And this week, the trade of the week is a stock that I featured in my daily newsletter at tradescores.com, NIHD, a relatively low price stock, 55 cents only. I picked it right here on the abnormal action. We had the abnormal volume, abnormal price action, had broken the downward trend line, had built a rising bottom, all of the things that I look for. That was at 58 cents. The market took a little while before it started to gain some momentum again, but on positive news, the stock was up over 70% on Friday, and that all comes down to the market telling you what to do before the news comes out, and that happens so often, and that's why I really focus on that abnormal activity when I'm looking for opportunities. Well, that has been the Stock Scores Market Minutes for February 26. To learn more about the Stock Scores approach to trading, go to stockscores.com/learn. Hope that you like this video. If so, click on that like button, hit the subscribe, and most importantly, have a great week in the market and trade well.